Welcome back to our channel, and we have a special discussion about Peter Schiff, CEO of Euro-Pacific Capital, financial commentator, and author of several best-selling books on economics and finance. In this video, we will be discussing Peter's predictions for the 2024 housing market crash and how you can prepare for it. Peter Schiff is known for his accurate predictions of the 2008 financial crisis, and his insights are highly valued in the financial world. So let's dive right in and see what Peter has to say about the 2024 housing market crash and how you can protect yourself from its impact. Peter Schiff, a well-known financial commentator and author, has been warning about the housing market crash in 2024 for several years now. According to him, the Federal Reserve's irresponsible monetary policies are to blame for this impending disaster. The Fed's actions of printing trillions of dollars and keeping interest rates artificially low have created an unsustainable bubble in the housing market, leading to a surge in demand for housing and skyrocketing prices. However, these prices are not being driven by real demand but by speculation and easy credit, which is a recipe for disaster. When the market eventually corrects, prices will come crashing down, leaving homeowners with negative equity and banks with a high number of foreclosures. This crash will have far-reaching consequences and will lead to a recession, affecting not only homeowners but also the broader economy. Therefore, it is crucial for homeowners and investors to prepare themselves for the worst effects of the crash by taking simple steps such as avoiding taking on too much debt and investing in other asset classes. Additionally, the government needs to take a hands-off approach and avoid intervening in the market to promote economic growth and prevent market distortions, which will only exacerbate the problem. By taking these steps, we can minimize the impact of the crash and emerge stronger once the economy recovers. The impact of the housing market crash will be felt not only by homeowners but also by businesses and the broader economy. The decline in consumer spending will lead to a decline in business profits, resulting in layoffs and a rise in unemployment. Banks will suffer significant losses due to foreclosures, leading to a credit crunch and a decline in business investment. This will create a vicious cycle that will further exacerbate the economic downturn, leading to a prolonged period of economic hardship for many. The impact of the housing market crash will be felt across all sectors of the economy, from small businesses to large corporations, and will have far-reaching consequences for years to come. It is essential for individuals and businesses to prepare themselves for the worst effects of the crash by taking simple steps such as avoiding taking on too much debt, investing in other asset classes, and seeking assistance from their lenders if they are struggling to make their mortgage payments. By doing so, they can protect themselves from the worst effects of the crash and emerge stronger once the economy recovers. It is important to remember that the housing market crash is not an isolated event and can have a domino effect on the broader economy. Therefore, it is crucial for individuals and businesses to take proactive steps to protect themselves and their investments from the worst effects of the crash. By doing so, they can minimize the impact of the crash and emerge stronger once the economy recovers. Homeowners who are struggling to make their mortgage payments should also consider seeking assistance from their lenders. Many lenders offer loan modification programs that can help homeowners reduce their monthly payments and avoid foreclosure. However, it's important to note that these programs may come with certain eligibility criteria, such as being current on mortgage payments or having a certain debt-to-income ratio. Therefore, homeowners should do their research and understand the terms and conditions before signing up for any loan modification program. In addition to seeking assistance from lenders, homeowners should review their insurance policies to ensure that they have adequate coverage in case of a natural disaster or other unforeseen event. This will help protect their property and finances in case of any unexpected events that may occur during the housing market crash. Investors should also consider diversifying their portfolio by investing in precious metals such as gold and silver, which tend to perform well during economic downturns. However, it's important to remember that no investment is completely risk-free, and diversification can only help mitigate some of the risks. Investors should also consider investing in other asset classes such as bonds, real estate investment trusts, REITs, and exchange-traded funds, ETFs, to further diversify their portfolios. Overall, the key to preparing for the housing market crash is to be proactive and take steps to protect yourself and your investments. By seeking assistance from lenders, reviewing insurance policies, and diversifying your portfolio, you can minimize the impact of the crash and emerge stronger once the economy recovers. It's important to stay informed and keep an eye on the market trends to make informed decisions about your investments. Remember, preparation is key to weathering the storm and coming out on top. The government should also ensure that there is strict regulation in place to prevent predatory lending practices that target vulnerable borrowers. This can be achieved by imposing limits on interest rates and fees charged by lenders, as well as requiring lenders to verify borrowers' income and creditworthiness before approving loans. By doing so, the government can protect borrowers from falling into debt traps and reduce the risk of defaults. Additionally, the government can provide financial education and counseling services to help borrowers make informed decisions about their finances and avoid taking on more debt than they can handle. Furthermore, the government can play a crucial role in promoting affordable housing programs that cater to the needs of low-income families and individuals. By investing in these programs, the government can create jobs and stimulate economic growth, ultimately benefiting the entire economy. This can be achieved by providing tax incentives to developers who build affordable housing units, as well as offering subsidies and grants to low-income families to help them afford housing. By reducing the wealth gap and promoting home ownership, the government can create a more equitable society and promote social mobility. The government has a critical role to play in preventing the 2024 housing market crash and promoting a healthy and stable economy for all. By ensuring transparency in the lending process, regulating predatory lending practices, and promoting affordable housing programs, the government can protect the interests of its citizens and prevent market distortions. Homeowners and investors should also take proactive steps to protect themselves from the worst effects of the crash, such as avoiding taking on too much debt and diversifying their investments. By working together, we can weather the storm and emerge stronger once the economy recovers. In conclusion, the 2024 housing market crash is a looming disaster that homeowners and investors need to prepare for. The crash will have far-reaching consequences and will lead to a recession. However, by taking a few simple steps, homeowners and investors can protect themselves from the worst effects of the crash. Moreover, the government needs to take a hands-off approach and avoid intervening in the market. This will promote economic growth and prevent market distortions. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more videos like this. Also, don't forget to hit the notification bell to stay up to date on our latest uploads. Thank you for watching, and we'll see you in the next video.